Well, I think it's quite brave in that it's not Brexit related, if you see what I mean, and that we haven't actually resolved Brexit yet. And so if you're a US company or a European company and you're buying a UK company now, you're effectively saying, I think this is good enough value that even though I don't know what the trading environment is going to look like, that I'm willing to take that risk and go ahead and buy that UK company. So I think what it's effectively saying is that there's such a margin for error in the valuations in the UK at the moment that I'm willing to go ahead and do that anyway. And I think if Brexit, or if and when Brexit does get resolved, you'll see this happen more and more, because actually that question mark goes about the UK.
Are there any particular sitting ducks that you would flag up to us, sectors that make sense, or company profiles that we should watch out for?
Yeah, I think there would be some quite clear ones. So for example, last week you saw the Babcock chief executive come out publicly in the press, I think it was the Telegraph, and say that private equity might be interested in us or something along those lines. There would be plenty of industrial companies in the UK where on most metrics relative to peer groups, it would be attractive versus, for example, US industrials. So yeah, I think if you were scanning in the UK, if you're a private equity, for example, sort of doing your ruler over UK corporates, the industrial sector would look quite attractive.
Is it a negative at this point? I mean, clearly we've got enormous events taking place around Brexit, uncertainty out there. Is it right that companies have a for sale sign that go up straight away where key assets are bought in a period of uncertainty, or should the government step in at some point and try and prevent some of this?
Why do you want big? You're going to get bigger government anyway, Karen. Have you not seen the manifesto?
Go elsewhere. If these companies are listed elsewhere, you no longer have that wealth in one nation.
That's terrible, because surely if we have the productivity, we have the education, we have the infrastructure, we have the right regulation, we have the right tax rate, then these companies will continue to proliferate. Why would you want to gate international investors?
But were you asking for brand new companies, billions and billions of pounds worth of new companies to be set up overnight? And that simply doesn't happen to replace the ones that are going elsewhere.
Take the companies and go home with them. They're still going to be based in the UK, a lot of these assets.
Go elsewhere, you only get a slice of it. You're not getting it all, right?
I think what's frustrating sometimes from a shareholder perspective is that management teams are willing to recommend offers that are perhaps not overly ambitious. So for example, you are getting takeovers happening at 5% dividend yields, which from a shareholder's perspective you're saying, oh, well, come on, we could probably go for a higher price here. But management teams are quite naturally cautious and therefore saying, I think you should take this offer. And there have been a few circumstances this year where we as the shareholder have been saying, well, we're happy that there's a cash bid, but actually we feel like this could be a bit higher.
Yeah.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.